everybody, welcome to Stockradar Stocks on the Move for another week. Today's date is the 2nd of the 1st, 2025, bringing in the new year. Hope everybody's had a great Christmas and New Year. I had a great time with my family in the Gold Coast for a week, eating and drinking and swimming and having a great time, so I feel very relaxed and ready for the new year. As we know, the stock market ahead is going to be an interesting year because we never know what's going to bring to us, and whatever we think we know is probably wrong about it. So it'll be a surprise year, but that's how we need to survive the stock market. It gives us surprises. It does things we don't want it to do. We've always got to be prepared for every occurrence and to make sure our money management controls what we do, because that's how we make money in the stock market. Okay, so the first thing I want to talk about is not getting complacent. The US market's gone through the roof over the last couple of years. So we've got to stay safe and keep our eye on our stops all the time, our stock-specific stops. Because that's important, because there are stocks that have moved out recently, always on ones coming in, but we've just got to be careful because we don't know which ones are going to come in and go out. So picking winners in 2025, it's a bit about back to basics and what are we really trying to do. So I'll talk about that a bit today as we go through. So first you want to go to the top 10 for 2025. And we've got, well, these are actually the top 10 trend intensity ratings this week. So ALL is at the top, had a great run. AMP's a new breakout. VRG's making new highs. CPU's had a rocket put under it when it made new highs. AAG is a long-term trender. JBH is moving on that $100 level. Qantas has gone great gun, surprising us all. 7 Group, which is now SGH. Ansell and also FPH in the healthcare sector. So some interesting stocks there, and you can see Aristocrat there. We had that phase there where we looked here, Aristocrat wasn't doing anything, it was below this high, we didn't get a trend reversal here, so we didn't have any confirmed trend position within this period here. But once we make a new high, then let's make the decision for us that we're going to trade a new high, and that's what the market does. It rallies strongly as a new high often does. So that's Aristocrat. It's a very, very simple one. We had the breakout here with volume and momentum down the bottom here, a good new high, and we all followed. So that's really what we've been about and where we've made a lot of our money over the last year or two. Okay, so this is the top 10 anyway. Our stock pick count is flat again at 67, so nothing really happening there. We lost a few a couple of weeks ago, flat this week. So we've got 50 stock picks of 153 stocks at the moment and 7 ETFs of 24 at this stage. Okay, so now let's go to the overseas markets. First off, the Dow Jones. Well, they've all had a little bit of bout of selling, really. So they've all come off a little bit. We've seen a selling challenge. Hasn't been enough to really break things down. We've got a support bubble there that I'm looking at, which is where I would consider some sort of concern. If we've got the moving average, the trend line and the horizontal line there all being violated, then we could well see a further move down. But the market has been resilient, we know. It's gone on a long way. So we're just got to be careful. This has come off. There's been a bit of volume here. If we look at the Nasdaq, not quite as bad there, but it has come off a little bit there. Nothing really untoward at all. There's one big volume week there, which is neither here nor there. We just keep an eye on those little areas there that we look at for support down here around S1. Trend line, moving average, horizontal line there. S&P 500, it's also pretty similar. It's still up near its highs, it's doing fine. The Dow's the annual that's really come back a lot. So I'll keep an eye on the support bubble there. But it looks okay. Bit of selling appearing there. The momentum slowed a bit, but it's still on very high levels. So really, we might be looking for a needle in a haystack because the market still looks pretty strong overall to me. And so does our market there, just going up in high highs, high lows, performing very well since it's made that new high. So we just continue to assume the trends are going to go higher until told otherwise. So that looks okay. ASX 200 in the commodities front. Copper's suffered a bit this last couple of weeks, testing a bit of support through here, which you would hope would hold. Otherwise, it might put any recovery on hold for a while, because we really are looking at this as a major bullish picture here for a breakout above here. But if this starts to break down again, well, we could see it move back down to here again. So this trading major will prevail. So nothing really in the hot spot yet here for copper. Gold, trend still intact. It's been chopping about a bit for the last few weeks, but really it's still holding that trend. It's above the average. You can see the selling challenge here. This acceleration has slowed, of course. So again, the amber light's flashing, but it hasn't gone red yet. So we'll just keep an eye on that one for the moment. And then Brent crude, well, it's just dribbling across the support level there. Really nothing happening there at all for us. There's been a bit of buying, I guess, through here. Again, we don't want to go into too much detail because it's really more the bigger picture we're looking at for. So downtrend is still the pattern for Brent crude. Okay, so that's all the overseas markets. Stock big count. Okay, so now I want to get into some Australian stocks. We've covered a lot of stocks here last year that have gone very well. I'm going to show you a couple more and a couple more new ones, I hope. And we're going to have a look at a few of these health stocks here. Look at the diversity of movement in those stocks there. So first off, what I want to do is get a quick look at Qantas, which really has been a surprise, but it continues to go high. So really it's a matter of focusing on what you're looking at is a new high, is what I'm looking at. Nothing else, nothing about dividends, nothing about the company, just look at the price action. And the price action has been very nice there. It moved up in good volume, good momentum, and it's continued higher as well. And there's no reason we wouldn't think this will continue higher for now because that's the way it's behaving. Okay, uptrend in tech, trend intensity rating plus 10 for Qantas. On the other new high front, more recent new high is Zero. So it's really gone through, it's recovered, had a big bang down here, it's recovered very, very well over the last couple of years since started 23 and now pushed into new high territory. So I'm just showing you this one because it's the very early stages of a new high. We protect our position always in case it doesn't work, but more often than not, and especially in this kind of market, these new highs are very powerful. And that's quite a big resistance level we've got back here. It's a fairly, tried a few times, failed. We saw a big collapse in prices, and it's now recovered to challenge it and break above it. And if I just zoom this volume a little bit there, you can see there's been very, very nice volume momentum accompanying this move higher. So it looks interesting one, as I say, I'm just pointing out to you because it's probably in the early stage, so you can watch and monitor, trade, do whatever you like. But there it is for you to have a look at. Okay, now the one's an interesting one here is Coles and Woolworths. I'm talking about diversity of price action at the moment. If we look at Coles, it really has been in a big trading range for a while, since 2020. It's now attempting to break out of that trading range. Let me just clear this up a little bit. Get that big volume spike out there so we can see the volume. So we can see here the volumes have been increasing a bit. Come on, man. Here we go. Okay, we can see it's been quite a lot of green bars through here. Bit of a reddish challenge through here. The price did come down. So it's by no means certain, but it is the area we're looking at to break, to signal a fairly good move higher by Coles. It's simply a new high again, and we trade it the same way as we do with every stock. Trend intensity rating is +1, so it's neutral and ready to rally. And everything's sort of looking prepared and ready. Momentum just in a positive territory. And Woolworths, if we look at Woolworths, it is not attracting any money because it is going down in a series of lower highs and lower lows, and has been for some time. So really is quite a strange thing that's happening there. Woolworths is down and Coles is sideways, but looking quite interesting. So this is a bit mixed Woolworths. I really can't tell you much on it. Momentum's weak, volume's a bit mixed. It's a new low here. High highs, high lows. So really, it's not something I'd look at. And trend intensity rating is -7. Anyway, so let's move on and look at something that has some more prospects. Okay, so now one what has had a recent breakout is encouraging one is AMP. In the insurance sector, we've got QBE, IAG. Well, it's not really insurance, it's more of a diversified finance these days, but it is recovering well. It's been through the whole cycle. It's now in an uptrend cycle at the moment and moving higher. I've just extrapolated up the range here, which gives me a rough idea where it might get to, and that's sort of a resistance level up around here, going back into the late 20s. So AMP looks interesting. Its trend intensity rating is +10. It's going higher. It's just made a new high here, which is what we always buy. So it looks pretty good. So we're hoping for some more moves on that this year by AMP. Everything else has been constructive there. You can see the volume's been a bit mixed to volume, but everything else, momentum, average and price action is all okay. So we're getting a trend intensity rating of 10. Okay, now I did mention to you healthcare stocks. If we just go and have a look at some of these stocks here in the trend intensity tables, you can see we've got these top four here: Ansell, Fisher Paykel, Pro Medicus, Telix Pharmaceuticals, all performing pretty well. There are only four of them there. They're all generating some pretty good returns for us. And then you get into the middle ground of EBO and RMD, which are prospects at the moment, because they're in the neutral area and they're trying to move higher. And then you've got down here CSL, Cochlear, Neuron Pharmaceuticals, Sonic Healthcare, and Ramsay Healthcare, all sick as dogs. So, really is the two areas of healthcare I understand. but still, it isn't amazing how some can be so strong and some so weak. So let's just have a quick look at a couple of the charts. CSL, for instance, it's just been in this range for a long time, which we've been watching, hoping for a breakout above this range here, but really doesn't look all that promising at the moment. The volume has been pretty heavy on this downward move of late, so it really is not looking all that encouraging to me. CSL, its trend intensity rating is -7. Sellers dominating, momentum weak. Okay, then we go to Cochlear, which is also a similar thing, had a good breakout, a good rally, then it failed up here around 340, came back and really doesn't know what it's doing. Some buying has returned here, which is a little bit more encouraging, but nothing really to say too much because momentum is still weak. It was a good trend, a good little run up here, and all of a sudden it just stopped. But now trend intensity rating has come back to -8, so not looking all that encouraging. So look elsewhere again. And then we go to another one, Sonic Healthcare, which is, come from $46 down to 24, so it's nearly cut itself in half. And it really isn't looking all that fantastic at the moment because trend intensity rating is -8, meaning it's in a downtrend. It's below the average. Volume is really not telling us much, and momentum has almost got back to neutral. So that's probably one positive sign that may occur, because it probably is looking a bit more sideways movement at the moment. But this can always fall further again. So really, it's just really one that we wouldn't look at, wouldn't consider. There's no evidence of an uptrend appearing, and in fact, the downtrend's in force. So nothing here on Sonic Healthcare. Okay, and then Ramsay Healthcare, another one which really just took a big dive from $85. It's now $34. Just you just look at this stock and you go, well, no, thanks very much. Lower lows, lower highs, heavy volume, momentum weak, all the things we don't want to see about a stock price. So it is suffering a lot. Okay, but then we go to the positive side, and the positive side is stocks like Ansell, which has rallied quite nicely. It surprised us all. It's come from a really low point down here around about 24.60. It's up around 33, 34 now. And looking pretty good because it's moving ahead strongly. Momentum's good. The volume's been awfully good through this rally here. If I can just blow that up a little bit so you can see it. It's awfully strong through here. A new high there. Trend intensity rating is +9 there, so it's looking good. We had a trend reversal, then a new high, good volume, all those things you want to see. And this is just telling me the price advance is steady and continuing higher. Okay, so that's Ansell. Then we go to Fisher and Paykel, which is another new one, which is looking like interesting one again. Even if you're not in it, we got in this one a while ago, down around $25. It's now around $35. But you can take a new high signal if you want it, because it's starting to make new highs here and looking reasonably interesting as it moves through this $34 level. Trend intensity rating is +9, so we've been holding this one. We tightened our stop because the market did hesitate a bit there, but it is now starting to mount a challenge again, so we're pretty hopeful about this. And volume is expanding and momentum is also it's powerful. It's slowed down a bit to this little dark move here, but stayed above 0, so it looks fine. So trend intensity rating is +9. So there's your health stocks for you. Just a little bit of difference there, even with the consumer staples, Coles and Woolworths. You can never really tell who's going to perform, who's not going to perform. One gets on top. But really, we just follow the trends of these things, and that helps guide us as to what we should be doing. So no Ramsay Healthcare, no Sonic Health, no Cochlear, but we like things like Ansell, FBH, T&E, and sorry, not T&E, Fisher and Paykel and Ansell, and Pro Medicus and Telex Pharmaceuticals. That's what I was trying to think. I'm sorry, I stumbled all over that one. So that's where the health stocks are there. One other little health stock which I'm going to show you today, which is not one that I cover, but it's a smaller end one, and it is looking interesting. It's got a fairly good story behind it. It's come down from a long way, from up just around $1 to around about 10 cents. It's now starting to recover, and what I like about this last move here, it's now starting to move above the recent high back here up around 46, 47 cents, and we're getting some very good volume pushing this move higher. Good momentum, trend reversed above here. Next resistance is up around $1 again, so it looks very interesting for me. Paragon Care again. Make sure if you're going to trade these stocks, you trade with a stop, just to make sure that you're safe in all these moves. It's all about being safe. It's all about not losing money, and also making sure you lock in your profits. So that's Paragon Healthcare. So really, that's about all I've got for you today. what's happening in Stockradar? Well, newsletters at the end of January. I'll start doing the blog again soon, things like that. So as I start to gear up for the new year, for 2025. Just briefly, I wanted to go back to really just explain to you what I do. The new year is all about cleansing our minds, getting rid of our baggage for 2024 and thinking clearly about what it is. And I keep going back to these very basic things, basic elements of the stock market, the cycle between distribution, trend, accumulation, and those different phases, and also just a simple new high and trend reversal that I look at. I buy them, then I set a stop, and that's how I do it. My stops are set so that I don't lose too much, and I trial winning stocks so I don't lose my profits. So it's a very simple approach that I have, and that's really what you should try and do, whether you do what I do, follow what I do, or do your own thing. Keep it simple. There are many different strategies that work on the stock market. Okay, the problem is ourselves. We're the ones that can't make them work. So try to focus on one that works, keep the process clear and simple, and then drive it hard, and that will make it a lot easier to implement, because as I said before, some people find it hard to follow these steps. But if you follow the steps, it will all work out okay. All right, so we have a process, I have a process of how I analyse my stocks and how I enter them stocks. My trading rules are then governed by money management, so I get in and my analysis, once I'm in a trade, the outcome is governed by money management. And remember, those two things work, they work well, but remember, you're in charge. You're in charge to ensure rules are obeyed, that you set for yourself, and control is maintained. Otherwise, you are dead, because you're going to be inconsistent. You're not going to not going to know what you're doing. You're going to be confused. So it's important. So it's really important to be clear, simple, concise, confident. All those things that will drive a good trade plan. Okay, so happy and safe trading for 2025. I hope you have a good year. Anyone wants to have a chat and give me a call. Happy to take on some new subscribers. We're going really well this year. Things will not be what we expect this year. There will be all sorts of things that will occur that we're not expecting. Some will be good, some will be bad, but we've got to ride those bumps, because that's what we have to do in the stock market, because they come, and we need to be prepared. So that's what I've got for you today. At this time of year, at this stage of the bull market, we cannot get complacent. It is important to maintain profitability by not getting reckless and being vigilant. There are profits to be made and profits to protect. Key things. We never know what's around the corner, apart from the fact that corrections will occur, and our stock market, especially in the US, has gone a long way. So we've just got to be prepared. As it keeps going higher, the odds of a correction get higher as well. So remember, it's a trading crime to let your profits evaporate. So make sure when you get good profits, you hang on to them, because it's really important that you do that. And that's part of money management, basically. So watch your trends, heed your stops, stay safe, have fun, and I'll see you all next week. Thanks very much.